Hello students, welcome to my YouTube channel Resilient Classes for Commerce. If you are a beginner in accountancy, then do subscribe to my channel to get a comprehensive tutorial on accountancy. Let me start by asking you a few questions. Do you know what accountancy is? Do you know India played a very important role in the development of accountancy? Do you know who the father of accounting and bookkeeping is? To know all these, watch my video till the end. Let's start from the beginning. The first development in writing, counting and money was found in the Mesopotamian civilization. The auditing systems or the method of checking books of accounts was first found in the ancient Egyptians and the Babylonians. In India too, Chanakya wrote Arthashastra during the Mauryan Empire, which is very similar to financial management, in which he wrote detailed aspects of maintaining books of accounts. In the 15th century, it was the Italian Luca Pacioli, it's written on the board, it's Luca Pacioli, recognized as the father of accounting and bookkeeping. He was the first person to publish a work on double entry bookkeeping. Now let us understand the meaning of accounting. The American Institute of Certified Public Accountants gives us the definition of accounting. According to the institute, let us understand the definition. It says, accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character, and interpreting the results thereof. Now, if we underline the main terms of this definition, we can understand the characteristic of accounting. Let us underline the terms. We have recording, classifying, summarizing, money, transactions and events, financial character, and we have interpreting. Now, let us write down the main terms on the board. Now what I have done is, I have written all the underlined terms which I have marked in that definition. I have written it in point form on the board. So the first point comes identifying. Now you remember I had underlined transactions and events. Okay. Now under transactions and events I have written identifying. So identifying is the process of finding out business transactions which are of financial character. So here what we do is, we find out those transactions which are of financial character. Remember, accounting records only those transactions which can be recorded in terms of money. So here we identify only those business transactions which are of financial character. Now let us come to point number 2. You remember we had underlined money. Remember, I have said that accounting records only those transactions which can be measured in terms of money. So here measuring is done in terms of money. Every country has its own currency. In India we have rupees. So that is why all the business transactions are done with the mode of rupees as its currency. Let's come to point number 3, that is recording. Okay. Now recording is entering business transactions of a financial character in the books of original entry. Okay. So recording is the art of entering, okay, any business transactions into the books of original entry. And this book of original entry is called as journal. So remember, journal is the first book of original entry where the first transactions are recorded. Now let us come to the fourth point, and that is classifying. In classifying, what we do is we group the transactions which are of same nature into one group, okay, into one place. So here what we do is we take all the transactions which are of same nature and we put them at one place. For example, the transactions which were recorded in journal are now classified, or they are recorded into a book called ledger. So ledger, what it does is it groups all the transactions which have been recorded in the journal at one place. For example, if you have Ram's account includes all those transactions which are related to Ram. Now let us come to the fifth point, and that is summarizing. The other word for summarizing is presenting. So in summarizing, what we exactly do is we present all the financial data in a manner which is understandable to the users of these information, and that includes preparation of trial balance, trading and profit and loss account, and balance sheet. So in this summarizing, what we do is we present all these data in a manner so that the users of the information can understand it. Let us come to the sixth point, and that is interpreting. Now interpreting is a process of interpreting data, okay, to make a meaningful judgment about the financial position and the profitability of the business, okay. So whatever data is presented is now understood by the users, and then they make a meaningful judgment about the profitability and the financial position of the business. Now let us come to the seventh point. It is communicating, okay. Communicating is making known the financial data to the users of the information, okay. So communicating is the process of making people, or internal and the external people, know about it. So there are two types of users: internal users and external users. In the internal users, we have the owners, we have the management, and also the employees. So these are the internal users of the organization. Among the external users, we have banks and financial institutions, we have investors, we have creditors, we have the government, and the consumers and the public. I repeat, among the external users, we have banks and the financial institutions, we have creditors, investors, consumers, public, and the government, who are interested in knowing the financial data of the organization. Now students, let us come to the term called bookkeeping. You must have come across this term. Let us understand what bookkeeping is, and then we can analyze the difference between bookkeeping and accountancy. Now let me tell you in the beginning that bookkeeping is just a part of accountancy. Is that clear? Now the process which involves bookkeeping is identifying financial transactions. Okay, the first point is identifying financial transactions. Second, measuring all those financial transactions in terms of money. The third point is recording transactions in the books of accounts. Mainly we do it by preparing journal entries. The fourth one is classifying recorded entries and grouping them into similar nature. Now here, in classifying, what we do is we actually prepare ledger accounts. So we can understand that bookkeeping involves identifying, measuring, recording, and classifying. But we have learned accountancy includes summarizing, interpreting, and communicating as well. So you can understand that accountancy is a wider process. It not only identifies financial transactions, not only measures them in terms of money, not only records, classifies, but it also summarizes, interprets, and communicates. Now let us come to one of the most important system of recording transaction, and that is called as the double entry system. Now remember, double stands for two. Every transaction has a twofold aspect, and that is called as debit and credit. For example, if you buy a furniture for rupees 5,000, what happens? The furniture comes in and your cash goes out. So here also you have twofold aspect, the furniture coming in and the cash going out. So every transaction has a twofold aspect. So double entry system records these twofold aspect of accounting. What it does is, now let us understand the features of double entry system. The first point says it maintains complete records of transactions. So it maintains complete records of transaction. It recognizes twofold aspect, that is receiving and giving. Okay. So here what is happening is, when I gave you the example, here the furniture is being received and the cash is being given out. Okay. The third point says one aspect is debited and the other aspect is credited. Okay. So here furniture will be debited because it's coming in and cash will be credited because it is going out. The fourth point says, so as far as we see that as many number of debits are there will be that many number of credits. So that is why total of debits will be equal to total of credits. So these are the features of double entry system. Okay. So it maintains complete records. It recognizes twofold aspect, that is receiving and giving. One aspect is debited and the other aspect is credited. And we find that the total of debits will be equal to total of credits. Now there are three stages in double entry system. The first stage is recording transactions. Okay. Recording transaction is putting it into a book called journal. Okay. So making entries into journal. The second stage is classifying. Classifying involves preparation of ledger accounts. Okay. All the entries which were entered in journal are now classified and posted into ledger. And then the trial balance is prepared. This is stage number 2. So first stage was recording into books of journal and the second stage is classifying them into books of ledger. The third stage involves closing the books and preparing final accounts. So these are the three stages which involves recording, the second is classifying and the third is closing the books by preparation of final accounts. Now if you like my video, then do subscribe to my channel and do leave a comment in the comment section. Thank you for watching.